Students, today I will discuss a very important issue which will be helpful for coming new students in UPSC preparations because during last years, and you can see after the implementation of new economic policy 1991, price stability, or you can say inflation, always a challengeable issue for the government. As you can see, recently the economy faced in quarter 3 2024-25 deepest growth rate, low growth rate, 6.4%. And our monetary authority always try to stabilize the price for achieving twin goals, that is growth with price stability. Our growth always have the highest priority if you see Indian economy since 1947 till 2025. Now, prior to start my topic, Repo Rate in the management of money demand and money supply, where I write simply supply. You know, the main cause of inflation, either demand pull inflation or cost push inflation. Recently, if you see, the inflation is basically because of the demand factor as well as supply factor. And highest inflation persisting in our food articles, vegetables, green fruits, other edible product of the Indian economy, as you know. And government always try to stabilize it, but due to tough monetary policy, high repo rate, the demand for credit, and as you know, the direct demand of product in the market decline. If you go through the economic survey, you will find out the basic cause of downfall in the growth rate was the decreasing private sector consumption expenditure. And you can relate it with the coming budget. Government decided, as I think, predicted budget will provide some kind of tax relaxation, some kind of incentive to the private sector through more capex expenditure. You know, capex means capital expenditure. A number of students always confused regarding the repo rate, which is very simple explanation how the repo rate exists in between money demand and money supply. You know, since last number of years, government always manage the high repo rate. Why? And what is the effect of repo rate? Prior to understand, you should clear the meaning of repo rate. Repurchasing auction means, if you go through this diagrammatical explanation, you can betterly understand. Suppose this is commercial bank, State Bank of India, Punjab National Bank, HDFC, private bank, etc. All these are known as commercial bank. And this is the central bank, Reserve Bank of India. You know. Central Bank or Reserve Bank of India determine the monetary policy. Very clear. And one main measures of monetary policy, because there are the multiple measures of monetary policy which we identified into categories, quantitative measures and qualitative measures. But as I decided to discuss today only the repo rate mechanism, how it going to adjust the mismatch in money demand and money supply, I will explain it with the help of this diagram. You can know, and you know very well, if our commercial bank are giving the credit or loan to both consumer and company, consumer loan and company loan for the production. Generally, our different private company, public sector industries, etc. borrow the money from the commercial bank for their operation of the industries, as well as our consumer also borrow the loan from the commercial bank for their durable, consumable goods purchasing like car, AC, etc. And their consumption both will determine the aggregate demand in the economy. As you know, companies are borrowing for the investment purposes and consumers are borrowing for the consumption purposes. And both consumption and investment determine the aggregate demand. As in the beginning of my statement, I started during the quarter 3 of financial year 2024-25, our GDP growth rate was very low, 6.4%. And after that, RBI predicted that in coming financial year 2025 and 26 up to 27-28, in these 3 years, expected growth rate is 6.5% of our economy. Dr. Sirendra Rajan also written in Hindu paper. I read it deeply. And final, what his conclusion? Our economy will grow around about 6.5% during these 3 financial years, 2025, 26, 27, 28. And in quarter 3rd of this financial year, growth rate was very low. After the analysis, there are so many articles written in Hindu other newspaper, but they conclude private consumption and investment both are responsible for low aggregate demand and low growth rate in our economy. RBI also tried to manage the inflation. As you know, inflation rate was very high, up to 7.5%. Recently, it is under controllable limit in January 2025 or December 2024. How this repo rate work? If our commercial bank giving the loan to the consumer as well as company for the investment purpose, they provide on the rate of interest, which is known as market rate of interest. And for the management of this fund, they borrow from the central bank. These are the borrowing taken by our commercial bank on the basis of repo rate. Actually, this repo rate, if I define in simple word, is the rate of interest at which our commercial bank borrow the money from the Reserve Bank of India. Technically, it is different. Under this mechanism, commercial bank have to give some kind of security to the RBI. These securities include like company paper, Government of India treasury bills, shares of the company, etc. If the value of these shares, say 100 crore, or these securities is 100 crore, and say repo rate is 6%. 6% is the repo rate, means RBI will provide the debt on the 100 crore rupees security only 94 crore rupees. It means repo rate is a discount rate on first grade security. If our RBI increase the repo rate, then definitely our commercial bank also increase the market rate of interest. This increasing market rate of interest discourages the consumption as well as investment of the company. Now you have to understand the technicality of this point. Why company decrease the borrowing from commercial bank? If the rate of return on investment is less than market rate of interest, it will discourage the investment. In actual, it will promote the disinvestment. Company will begin to sell out its capital in the market. Other side, if the market rate of interest is less than rate of return on capital or investment, then the company would like to invest more by borrowing from the commercial bank. As you know, during 2024, say 1st April to December, due to high inflation, our Reserve Bank of India maintained the high repo rate, and because of it our commercial bank also giving the loan to the consumer and company at a high rate of interest that begin to decrease the consumption as well as investment means consumption will decreasing, investment will decreasing. They are responsible for decreasing aggregate demand in the system by decreasing investment and consumption, and hence our growth rate is very low. It means if our aggregate demand begin to decline, means as you know the demand for money is the derived demand from the aggregate demand. Means money demand depends on aggregate demand. If aggregate demand is decreasing, automatically money demand will decrease, adjust with the money supply, and it will stabilize the price. It will stabilize the price. If prices are stabilizing but decreasing growth rate, that is the contradiction in nature. Then how we should manage it? Means our monetary policy should adjust with the fiscal policy. That is a very technical issue. Today my discussion based only on the repo rate. That is why one point which you have to understand, how the increasing repo rate discourages all over the market, leads the economy low growth rate scenario, as you can see in the quarter 3. That is the phenomenon. Now RBI is thinking to dilute that kinds of problem, but other side, as you go through the different research paper and economic books, you will find out non-performing assets of the government banks as well as private bank is decreasing around about 3%. If RBI lose its repo rate or reduce its repo rate, then commercial bank will give the more loan that can create the more burden. And global economy under the recessionary conditions, Indian economy also sees some kind of sign of recession. But government is very aware. And government try to adjust the monetary policy with fiscal policy so that they can achieve high growth rate with price stability. What are the mechanisms of fiscal with monetary policy? I will discuss it in my coming lecture. Students, now you can understand how the repo rate is working effectively. If the condition is reversed, the situation will be reversed. Today, this lecture is complete. Now, this is my target, how to understand the economy, how the economy is working. That is the point of discussion. Okay, thank you.